Hi, it's Tyra, and I'm back with a quick video on business life insurance. If you have any video requests, email them to me, thepurposefilledwoman@gmail.com. Comes directly to my phone. I try to answer them as quickly as I can. I just had a new baby, so I might not be as fast, but I want to make sure that you guys have everything that you need to study, because I want to see the right kind of people get into the financial services business. So we're going to dive into business life insurance. If you need to get a copy of my notes, you can purchase them at www.thepurposefilledwoman.com. There's also a Facebook group, The Licensing Coach. Hit me up on Facebook at that group, and I'll let you in. And we have some videos that are posted in that group, and hopefully they help. So on with business life insurance. When you think about it, business life insurance is just like personal life insurance in the fact that it creates an immediate estate. And so if you are a part of a business, let's say you're the chef of a 5-star business, one type of insurance that your company would need on you is called key person insurance. Some tests may say key man insurance. Key person insurance is insurance that is placed on the life of a key person that's integral to the success of that company. So imagine you're a 5-star chef, your reputation, the fact that you are the one that's coming up with these amazing recipes and cooking them, delivering this special experience, you keep that business alive and thriving. If it were to be found out that you passed away, patrons of that company might not want to come back. They're like, I don't know about it. Shareholders in that company may feel nervous and say, you know what, I think I want to go ahead and move my money. I'm losing confidence in this business because the person who held it all together is no longer there. And so key person insurance is owned by the company. It is placed on the life of that key employee. So the key employee is the insured, but the company is the owner. The company is the beneficiary. The company is responsible for paying the premium. The company cannot write this expense off on its taxes because the company will receive the death benefit after the insured passes away, tax-free. So this is not tax deductible. Now, there's another type of business life insurance that we can talk about, and that's buy-sell funding. So let's talk about the agreement first. Buy-sell agreements are just contracts that say what happens to this company in the event one of the members or business owners, or members if it's an LLC, or stockholders if it's a shareholder held company, but one of the owners, that's what we're going to title it because that's the easiest way to think about it, is that if an owner is dead or disabled, here's what happens to the business. So there's a buy-sell agreement or contract, and then the insurance is the buy-sell funding for that contract. So the insurance provides the funding for this legal contract, and it determines what will be done with the business if this key individual dies or becomes disabled. So there are different ways that partnerships and corporations use buy-sell agreements. One is called cross purchase. This is where the partnership, each partner buys insurance on the other. Okay. Then you have entity purchase, where the partnership buys policies. The business has the policies on each partner. Okay. And then you have the stock redemption side. Now, this is when corporations buy a policy for each shareholder, and you have stock purchase. And I want to encourage you to just memorize them just as flat as I'm giving them to you. The test does generally, you're not going to go into a bunch of detail on it. They just want to make sure that you understand these purposes of business life insurance. And so with the stock purchase, it's used by privately held companies where each shareholder buys a policy on the others. The next style of business life insurance, and the third one that we're going to study, is called executive bonus. Now, I want you to imagine getting an increase in your pay, but it's via bonus, and it's used for the purpose of life insurance. Okay, so the IRS looks at it like you're making more money. So this is taxable to you as the employee. The corporation uses this to compensate executives. And so you may see that on the test too, insurance that compensates executives. But executive bonus is an arrangement where the company is offering you an increase in your salary in the amount that your premium would cost for you to increase your life insurance. So it's compensation that pays for this increased life insurance that you want to have. It is income taxable to the employee. Please remember that. It is tax deductible to the employer because it is paid to you like salary. The benefit, though, goes to your family. So the death benefit does not go to the company, it goes to your family. So this is a form of executive compensation called executive bonus, or insurance that compensates executives. Just depends on how your test wants to ask it. Y'all know in insurance world, these tests ask things in crazy ways, but I presented these notes to you hopefully in a very direct, straightforward way that'll help you to study for the exam. But of course, email me if you have any questions. Hit me up in the comments. I try to monitor those as much as I can too. And wishing you well on your tests.